What does the IRS consider tax fraud? What are some red flags the IRS is looking for with crypto investing? What are good strategies to use if we want to retire from long-term crypto gains? Hello, I'm Crypto Casey, and in this video, we are going to explore the rest of the tax questions you guys submitted on Instagram and much more with Lorenzo Abatiello, an expert and industry leader in cryptocurrency tax and crypto tax planning. If you want to see more content like this where we interview professionals in the cryptocurrency world to help us on our crypto journey, let me know by liking this video, subscribing to the channel, and clicking the bell notification to stay up to date on all of the latest content. This is part 6 of our interview with Lorenzo, where we learn about tax fraud, IRS red flags, and crypto retirement strategies, as well as things we should understand as investors and stay mindful of throughout the rest of this year while trading. Lorenzo is offering us a free 15-minute consultation with him about our crypto tax situations. So if you would like to redeem his offer, be sure to scroll down and use the link in the description area below, or use the QR code displayed on the screen. Awesome. So let's explore your tax questions with Lorenzo, a certified public accountant that can actually give us financial advice. All right, so what does the IRS consider tax fraud? And whenever tax fraud has been committed, what kind of penalties can people expect as a consequence to those actions?
Well, there's two different ways you can look at this. It's tax fraud or criminal tax evasion or tax avoidance. Right? There's two differences. Evasion and avoidance are very much so different. And then you have your more lighter, so tax notice. The tax notice, for example, is, let's say you left a 1099 off or a W-2 or something that's reported to the government that they know you have on your name and your social, but you didn't report. And then it's an automatic letter that gets sent to you. It's like, hey, we think you left this off. This is how much we calculated your new tax balance to be. This is how much taxes you owe. If you don't agree with this, send us a reason to dispute it. Tax avoidance could be a little bit of a heavier fine. You get penalties, you get interest. And that's more, I didn't report this correctly and I intentionally did it. And then you got to come in, you got to say, why did I report it this way? Right? And then that goes probably into a light audit. And when you get audited, people get really scared over that word. I'm not scared of that word because what are they going to ask you for? They're going to ask you for a credit card statement and a bank statement, right? They're going to want to know where your transactions came from. So when I take deductions for a business, everything I'm putting on that sheet matches with the credit cards and the bank statement. So everything's there. So there's nothing to hide. There's nothing to worry about. But if you do exaggerate that, it could be, you could get hit from a tax avoidance, and that's penalties and interest. Okay, you mess this up, this is how much it's going to be, this is how much you're going to owe. And then obviously criminals, like you're doing something wrong. That's jail time.
So as crypto investors, what are some IRS red flags?
The red flags right now, the IRS is looking for is, what I would say is, they have a blockchain analytics software that reads all the transactions and wallets out there and can put a risk score on your wallet. Another red flag, and how do you get that, right? Another red flag would be, doing a lot of these really off-color, off-the-grid type transactions and then connecting them to centralized exchanges. Now, you've put yourself in a situation where you're linking things, and now using these analytic software, if they can track that, it puts a higher risk score on you, something I would be worried about. Another thing is when you're putting all your transactions into a software and you're getting a ton of errors, it's definitely something that should be a little concerning.
Yeah.
The last thing I'd say is just not reporting stuff. You're just playing with fire. They're getting better and better at this. They may not be where they're at they should be today, but I can assure you that they're getting better and better at watching over this whole industry.
And if you need a cryptocurrency tax software solution to make calculations on your trades, check out CryptoTrader.tax. CryptoTrader.tax at the time of this video is still CryptoTrader.tax, However, they are rebranding soon to their new name, CoinLedger. So make sure you scroll down to the description area below to access the correct and official site, or feel free to use the QR code displayed on the screen, as we will keep the links up to date for you while they finish up their rebrand. You can use the platform for free. You can import all of your transactions and see your complete gains and losses overview for free, and you only have to pay if you want to download your tax reports for filing. Nice, back to Lorenzo. So if you're planning to retire using long-term crypto gains, what's the best strategy for minimal tax hits as you go through life?
I'll play with the tax rates. If you can control your income and you have all this money sitting around, play with the tax rates. Right? Don't take over too much where you're gonna start jumping brackets. Play within the brackets. You're playing the long-term game now. Budget yourself. How much do I need? If you're trying to buy Gucci loafers every day, you're gonna have to need a lot of money. So it also depends on your lifestyle, right?
Sure.
So if you can live below your means, you can live comfortably with whatever you have, then you can start playing with the brackets. And that's what I would say is you start there. That's a good starting point.
So if you are planning to retire from long-term crypto gains, take advantage of a crypto IRA as a tax planning tool with iTrustCapital. Using their services, you can trade crypto tax-free within a tax-sheltered retirement account like a traditional or a Roth IRA. I personally chose to invest my funds with iTrustCapital because they have the lowest transaction fees in the industry at 1%. Their monthly service fee is non-existent, $0, which is unheard of with retirement account services both traditionally as well as with other crypto retirement service providers. And soon, they are slated to become the first and only crypto retirement account service provider that supports DeFi functionality, allowing us to do cool things like accrue staking rewards, all tax-free or tax-deferred. Very neat stuff. So scroll down to the description area below to access iTrustCapital's correct and official site, or feel free to use the QR code displayed on the screen. Cool, back to Lorenzo. So can I get my crypto out of the United States without paying taxes using a wallet like Ledger or Trezor and depositing it into another country's bank?
Technically, someone needs to be reported that income. Technically. Once it's in ledgers, it's like digital cash in a safe. It's difficult to track. It's difficult to find. But, they're getting better and better at this. So what I would say to you is just play within the rules. There's so much that you could do within the rules that I would focus more of the attention on that than on trying to move money around and try and do under the table type moves when you can clearly do this within the rules and do pretty well. So that's what I would say to that.
Yes. Yeah, there's so many opportunities in this space, and I mean, that's just one way that doesn't seem worth it at all in the long run if you get caught. All right, next question. If I incorporate in Wyoming and do all of my business in New York, do I still have to pay New York state taxes?
Technically, yes. What the beauty of a Wyoming corporation is it has nothing to do with not paying taxes in New York. It's more having an anonymity towards the shareholders in the court, right? You don't have to list everyone that's involved. So it's really good. Crypto projects love it, especially when you're doing work in certain states that helps. But really where you derive and source your income is where you're going to be paying your taxes. And states like New York and California are, obviously higher tax states, are very aware of what people do. So again, if you're not earning money in Wyoming, there should be no reason why you're having a Wyoming tax return. And you're doing a Wyoming LLC for other purposes, not to avoid New York taxes.
I think a lot of people are thinking about Wyoming because they do have a lot of crypto-friendly, laws and regulations. But at the same time, wherever you reside, you're spending your money. Obviously, that state is owed some taxes.
I think it depends on what you're doing. Depends on the type of business. E-commerce business, you got to worry about doing business in all the different states you're collecting from.
True.
You have a pizzeria in New York, Wyoming LLC. I mean, it's clear as day that nothing to do with Wyoming.
All right, this was a fun question. If you buy a house with all your crypto gains, but then tax time comes, What happens if you don't have the money to pay your taxes?
Well, there's a few options. There's payment plans. You're probably gonna get penalties and interest, and they're gonna ask for it at some point in time. I mean, they're not gonna come lock you up. People think like, oh, I didn't pay my taxes. They're gonna come knocking at my door. They're not coming to knock at your door. You cannot pay your taxes for 5-6 years, and they still won't probably come knocking at your door. But you're gonna pay penalties and interest, and the longer you wait, the bigger that bill is.
All right, so somebody asked, if you never convert back to fiat, if you never convert your crypto back to fiat, and if crypto experiences mass adoption, so you're able to use this crypto to buy goods and services directly with the crypto, does that mean you won't have to pay taxes?
Now, if you're buying a goods and service, every time you buy a good and service with your crypto, it's a taxable event. So if someone sends me money for tax services in crypto, technically that's a taxable event. It's tax deductible because you're buying a professional service, but you're paying taxes on the gain or loss. So it's going to be a capital gain or a capital loss by sending that money. So that's not true. You will be paying taxes.
This question is very similar. If I were in a land like El Salvador where Bitcoin is a legal tender, do I have to pay taxes on it when I use it within that country?
Well, it depends if you're a citizen of the US, depends if you're living in El Salvador, how that's working.
Let's just assume they live in the US, but they're visiting El Salvador and using Bitcoin to get around.
It's going to flow through, and it's going to go flow through like you just spent, just like buying any good or service. I don't care where you are, you're buying goods and services with crypto. If you made money, you're going to pay gains. If you lost money, you're going to catch a loss. It doesn't matter where you are.
Got it.
You're going to reside in El Salvador, not be a U.S. citizen anymore. It's different. Follow their rules.
All right, so how can we pay quarterly estimated taxes when there's a lot of big unpredictable spikes in income when you're in crypto?
What you do in this sense is you look at last year. The government is a little behind when they deal with estimated taxes. They look at the past. So yes, unpredictability might be in the future, but the past has happened, locked in. And they'll look at that and they'll say, if you don't pay 90% of your taxable, of the tax that you paid in the previous year, then you will have an underpayment penalty. So you need to cover 90% of the nut that you paid last year through estimated taxes or through your W-2. That number needs to add up to at least 90% of the prior year. All
right, question from Hawaii. I heard Hawaii tax laws are different from the mainland. Is that true? If so, what are the differences?
They are a little different. I mean, not major different. It's only state. So every state has their own rules. It's not just Hawaii.
Okay.
Every state. And you really honestly need to know the different state laws. Hawaii is weird. Hawaii has a lot of, it's like they don't let a lot of exchanges in. You can't use Coinbase Pro there or Coinbase, I think Coinbase you can't use. They have a lot of weird little rules. One thing that we were doing, actually have a client in Hawaii, one of is an example of this is, and this goes back to the mining, right? If you section 179, you use the bonus depreciation for 1 year, taking all your depreciation in 1 year. Certain states don't allow you to take it. They only allow you to take annual depreciation. So they'll add that back. So let's say you had 100,000, you depreciated 50,000. You'll have 50,000 in income, because 100 minus 50 is 50 in income for the federal. But on the Hawaii side, you only take, let's say it's a 10-year life, so you take 10,000 a year. You'll have 90,000 in income. You're not going to be able to take the bonus depreciation on the state level.
Sweet. So that was part 6 of our interview with Lorenzo, exploring all the questions that you guys had. If you missed part 1, where we explore tax reporting basics and the importance of filing an extension this year while we await further clarification from regulators, you can check it out now by clicking on the link above. In part 2, we talk about how crypto trading, bot trading, and margin trading are taxed. In part 3, we discuss tax deductions, losses, and how we can legally decrease our tax liabilities throughout the year. In part 4, we discuss taxes on DeFi activity like staking, airdrops, NFTs, ETFs, as well as giving and receiving gifts in the form of cryptocurrency. And in part 5, we talk about how mining, borrowing, lending, and using crypto credit and debit cards are taxed, so be sure to check them all out. Remember that Lorenzo is kindly giving us all the chance to have a free 15-minute consultation with him about our crypto tax situations, so please make sure to scroll down to the description area below or use the QR code on the screen to redeem his offer. Awesome. Thank you so much for taking the time to watch this video. If you enjoyed the content, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So what did you think of part 6 of our interview? Have most or all of your crypto tax questions been answered? What other tax questions do you have that we didn't cover in this 6-part video series? Let me know in the comments below. Be safe out there.